So thank you all for tuning in to another video from Brockett Financial Services. In today's video, we're going over diversification in stocks and why I feel like this is very important. A lot of individuals don't know about investing in stocks. So once they hear about, a company that's offering shares to the public, which is, stocks, they just go invest in one company. And then they don't know why they're not seeing money or they're not gaining money from within that company and different trends that happen. So you all know we just went through the pandemic. That situation is still going on, but a lot of companies, did benefit from this, and a lot of companies did, definitely, were hurt by this situation. So before we start, Instagram, Brockett Financial Services, Facebook, Brockett Financial Services, YouTube, see Brockett Finance, website, Brockett Financial Services. Now I'm gonna just jump into it. So diversification. This thing, or diversification, is generally like don't put all your eggs in one basket. So when a lot of individuals say, you need to have your mind set on different things you want to do in life, different things meaning in like different businesses or whatnot, that's diversification. But you just picture that within stocks. So diversification, the definition, technique that reduces the risk by allocating investments across various categories. So when we mean various categories, you have different businesses and different sectors. Now, when we're going to invest, it's two things that we need to worry about. And the first one that we need to worry about is a little different than what the public will tell us. Let me grab this. So the first thing that we need to worry about is location. Excuse my handwriting right quick. But location. And the reason why we worry about the location of the business, what is that business doing? What type of business is it? For example, we have, Apple, we have McDonald's, we have Cheesecake Factory, we have a lot of different businesses, but what sector are they in? For example, I just give you all a heads up. For when the pandemic happened, a lot of individuals were on what? Social media. We were in the house. So technology, right? That's a different sector. When we go outside, just for example, fast food, that's the food industry. So think about that parameter within the situation or the time period that you're investing in stocks. Which one would benefit from that time period? So let's just go into this one. Let's say food. I'll put food right here. The next one I will put is tech. Another one that I put is retail. And to break this topic down to you all, the reason why I'm gonna refer a lot of things to the pandemic is so that you can understand the trends and the trends that be going on. So the food, tech, retail. If you want to invest, for example, if somebody say, hey, go invest in Apple, Apple falls under tech. So you're investing all your funds in the Apple, right? So individuals who invest in Apple, we already know, once Apple comes out with a product, what tends to happen? That product has some type of backlash or something like that. It's not, it's overheating, for example. It's running slow. It's not what they say. So Apple stock will then take a downfall. So if individuals are only investing in Apple at that time period, what's going to happen is that they lose money, but over time, since Apple is a strong company, it's going to keep growing. But this is why diversification is so important. So like, for example, when the pandemic happened, we all know that a lot of food companies, it went down, right? But now we need to think about what companies fall up under this category. So for example, let's say, got two arrows, I'm putting MC for McDonald's or whatever. Right here I'm gonna put cheesecake. Two different companies up under food, right? But we know McDonald's, for example, is fast food. We know Cheesecake individuals eat inside, it's a restaurant. So once the trend happens, such as, let's say, for example, the pandemic lifts or whatnot, we get past the peak, McDonald's is going to, well, guess what, still be open and people are going to go drive through because they're going to still make money. Cheesecake still has to wait through the time period of, the vaccine and everything opening back up slowly. So even under the food situation regarding location, you have different sectors of business that fall up under that category. The same thing for retail, for example. Like let's say this one, for example. Retail, we have, let's just say Target. And under this one, we have Five Below. Individuals that invest, Five Below had its greatest time during this pandemic. Because guess what? It's market trends. What individuals have to understand is that when you do figuring out the location of the business, especially retail, it moves by what? Supply and demand. You know, more people go out, you know, consumers go out, it starts to trend. So Target, for example, during this pandemic, you know, Target is going to go down, the stock is going to go down, you know, a huge lump sum. The reason why is because a lot of individuals have to go to Target, but more so, they have more different products than Five Below just between the two. But what tends to happen is that's what? It's more expensive. So during this time period of the pandemic, individuals are not going to want to spend a significant amount of money because the dollar has to move. So guess what? They go to Five Below. It's a lot cheaper for, you know, electronics and other things outside of food, but that's why they go to them. So Five Below stock at the beginning of the pandemic was roughly like $30 when it dropped all the way down. Right now, well, last week was trading at roughly $140 per share. That's already 4 times the amount that it dropped from that time period. So that's another thing that you have to think about, you know, the location, but now you have to think about what sector does it fall in. Now, the next important thing when you're thinking about, when you go from what type of business that it falls in, you need to think about what? This, put this right here. The size. So what I mean by the size is that how much are you investing into that company? And that's the next important thing, because if you're investing a significant amount of money within one company up under the location tab, like for example, I'm investing a lot of money in McDonald's, how significant do we think that company to grow over time? Do you think McDonald's is going to have a huge growth over time? No. The question is no, just in general. It's a stable company, but is it going to grow significantly? No. Most companies that grow over a large amount of time, since the world is transitioning from, you know, hand to hand, which is tangible objects, to more of intangible services. For example, Apple, Tesla, these things are becoming more, you know, technology-wise. And as technology, you know, rises in our time period, these are going to be the companies going to have, guess what, huge gains over time. But during the startup, it's going to have a huge hit because there's going to be certain things that arise within the technology that they're going to have to, you know, configure. Retail, do we expect retail to have a big you know, growth? No. The only company that had a huge growth that, you know, is a little bit up under this and it varies, you know, because they're definitely being a monopoly, is Amazon. Amazon doesn't, for example, Amazon doesn't have any physical objects, such as location-wise, running like Target, you know what I'm saying? Individuals and consumers, you know, sell on Amazon to help that leeway between them, so they have a less overhead cost. Five Below has an overhead cost because they have a physical location that you go inside of and do different things. But now that you're thinking of the size of how much money that I'm going to invest into these companies, that should be the next important thing. For example, let's say if you have $500, and this is what a lot of individuals suffer from. You need to know how much you want to invest. When you're thinking of investing, you want to know, guess what? How much money am I willing to lose upon investing within these stocks, right? So I have $500 to start my investment. Let's say, for example, I want to invest in the food industry, right? And I want to invest within this side. I want to invest 100 in the McDonald's. I want to invest 100 with Cheesecake. Cheesecake will continue to grow over time, but that already knocks off, I only have left $300. So at this point, when I have $300, I'm going to put MC. I'm going to put CC for Cheesecake. At this time, I only have $300. What else am I going to invest in that will give me the leeway to grow over time? So when a lot of individuals thinking of growing within stocks, they look at the quick hit. When people do quick hits in stocks, what happens is they flood one market of, you know, one sector regarding the location and put a significant amount of size within that company to get that quick hit. But will that always happen? No. So when you think of stocks and diversification, you're thinking of a long-term growth. How can I level out my fieldways? Just for another example, let me get this right quick. Another example. Let's look at this for example. I want to invest in let me just do this right quick. Let's think of a location. So I can just help y'all just dig a little deeper in this. Let's think of a location. Let's say, for example, airlines. for example, airlines, guess what? Everything's going to continue to grow over time. So airlines grow pretty slow over time, right? But what happened during the pandemic? Airline stock went down, right? Because nobody is moving. Everything is stopping. The dollar is not moving anymore. So you're thinking of another business what went up over time is guess what? Let's say Facebook. The pandemic, Facebook went up. Guess what? Because everyone is on their phones now. And when you're on your phone, all you're doing is electronic. You know, you're not spending any money, but Facebook is going up. So the individuals who are investing in these electronic companies, you know, during the pandemic, Facebook, for example, that we are on Facebook 24/7, they are gaining money while we're on the internet. Airlines, if you're investing in airlines during the pandemic time, it went down. But now if you're thinking of a long-term growth, you will buy into the airlines right now because over a period of time, when everything opens back up, people are going to start moving out, and that's when that will grow. Another one, for example, I said this and I posted there, I told everybody to invest in this company at that time. Party City. The reason why I told everybody to invest in Party City, because when the market crashed, Party City was what? 30 cents. 30 cents per share, right? So if you invest in Party City, you put, you know, you bought one, you got 30 cents within there. You bought multiple over time, boom, you're gaining a lot more money. But Party City, when the market crashed, for example, nobody is going to, guess what, go buy from Party City. The company can reach bankruptcy at this point because how insufficient funds that they're receiving. But guess what, as soon as outside open back up, Party City. Guess what, at today, $5 per share. So if you're investing in Party City at that time, you gain money over, for that one share you bought for 30 cents, it's now $5. So you gain over $4.70 for that one share. But this is why diversifying your funds is so important. You just don't want to go into one company. You don't want to just invest all your money within Apple. You don't want to invest all your money, you know, within T-Mobile or Verizon at that time. You have to, you know, find a leeway to invest in. If a for example, you only have $500, you don't want to invest $500 within one Tesla share. You're not going to gain money that way. You need to diversify your portfolio because guess what? What if Tesla go down? What if they have a missed launch regarding the product? You're going to lose money within that thing. So let's say you got $500. Let me buy a couple airline stocks, you know, just for example. Facebook, you know, it's roughly like $240 a share right now. We're not going to go with Facebook. You know, we're going to go with some other companies like AMD, for example, Workhorse, you know, other electronic companies that fall within that technology sector. And let's say retail, you know, I'm going to buy a couple Party Cities, for example. I'm going to buy numerous amounts of other companies that fall within that retail, but I'm going to buy them cheap, especially if I only have $500. Now, the more money that I have, that's when I, you know, would definitely buy more shares at different types of companies within sectors of, you know, for example, airlines, we have technology, we have oil companies, we have mineral companies. We have a lot of different companies within different sectors that they will grow over time. Now, a quick thing for a lot of individuals when you think of stocks and think of buying stocks, you need to read the graph. Easily, if you just go on Google and look at the graph and see the trends with that, the different time periods of when these companies are rising. But if you don't look at that, you won't understand it a little bit. Just make sure that you never buy stock after 4:30 when the market closes. You never buy stock before, you know, 9 a.m. That's another thing. But just tune into it and make sure y'all look at this video regarding diversification and what to leeway your funds to. You want an average or you can, it's never perfect diversification, I'm going to say that. It's going to be sometimes you're going to lose. Some stocks in your portfolio are going to go down while others go up. But that's the key thing that you have to remember. Is how many shares within that company are you buying. That's very important. So I'm going to provide more information regarding, you know, the buying aspect of, I'm going to have to start off with a portfolio of $1,000 and just tell individuals how to diversify and what, you know, some stocks that might be on, you know, rising within a time period. But this video will be on YouTube at C. Rocket Finance, and I'll make sure I upload it to the page. If you all have any questions, just leave it in the comments. And what I do is that on the next video, I'm going to just answer the questions. So that's it for today. Y'all have a wonderful day.